Hi, I'm Emma. I'm a student at UWM, and I'm going to be doing a presentation about different types of savings accounts. I'm going to talk about a traditional savings account versus a high yield savings account, just because I've had two of those. I've had both of those in the past. So yeah, we can go to the next page and talk about the traditional savings account first. So a traditional savings account usually has a lower interest rate, which the rate's usually about 0.33%. So you're not really getting a lot of money back each month. But they are at traditional banks. So you can actually go into a building, you can talk to someone, you can take your money out the same day. You can also have your traditional savings account at the same bank as your checkings account, which can be convenient. Also, you can take money out of an ATM. So with the traditional account, you have pretty easy access to your money, but you're not really getting a lot of money back each month. However, whenever you are opening an account, make sure to ask about fees that banks try and slip in there. So ask if there is a limit to the amount of times you can take money out. Sometimes they'll say you can only take money out 3 times a month or something like that. Ask if there's a minimum balance. So if there's a specific amount of money you have to keep in your account each month, or they'll charge you a fee. Also ask if there's any monthly maintenance fees, which are just money that they take out every month. So then we can move on to our high yield savings account. So a high yield is pretty similar to a traditional account, but you're going to get more money back each month because there's usually a higher interest rate. The interest rates are about 3.5 to 4.5% each month. However, usually they're found at online banks. So you can't go into a building and take your money out the same day. You cannot use an ATM. You can transfer your money from the high yield savings to your checkings, but it can take 1 to 2 business days. So if you put in the request on a Friday night, you might not get it until the next Tuesday. So you don't have as easy of access to your money, but you're going to get more money back each month because of the higher interest rate. However, similar to traditional accounts, you have to make sure that you're asking about any fees that banks put. So ask if there's a limit to the amount of transfers you can make each month. Ask if there is a minimum balance, if there's a specific amount of money you need to keep in your account. Ask about monthly maintenance fees, and then specific to high yield accounts, even if your high yield savings account has no fees for transferring, your checking account might. So make sure you look on both ends of that so there's no surprise fees. And then I can talk a little bit about my experience. So I have a Marcus account, which is I get 3.9% interest each month. I have no monthly maintenance fees, and I can transfer my money as many times as I want. I do have to wait the 1 to 2 business days, but yes, and I also have no minimum balance requirement. So I've had to go down pretty close to 0, and I've never gotten any fees from that. So then we can go on to the overall just takeaways. So overall, before you're putting your money into any account, make sure you're looking out for any ways the bank might try and slip fees in and take your money. So ask about monthly maintenance fees. Ask if there's a minimum balance, a certain amount of money you must keep in your account each month, or else they charge you. Ask if there's restrictions on how many times you can take out money or how much money you can take out. And then make sure you check both your checkings and the savings accounts for any fees. But overall, look for the highest interest rate, because the higher the rate, the more money you're going to get back each month. And interest rates can change, so look around. There are websites like Money Crashers, which can help you compare different accounts. So yeah, Marcus is one, but there are lots out there. And so look around and make sure you're watching out for the fees. So thank you for listening to my presentation.
Yeah. Thank you, Emma. Thanks for taking us through the different savings